Sir, thank you so much for joining us on Bloomberg. Obviously, today is an important meeting of European finance ministers, and the Eurogroup meets here, and obviously they want to hear your assessment too. And I wonder, there is a big debate in Europe about what is the right policy mix. When you look at, obviously, inflation, you assume that you have to continue to hike rates, but also you don't want to crash the economy, and you still want to grow. Can European authorities get that very fine line? Can they get through that and avoid what would be perhaps a landing, an abrupt landing to the economy?
First of all, a deep recession was avoided this winter because of very decisive policy action on the energy security side. And indeed, we are forecasting now slow growth for 2023 and high inflation. And that requires indeed a good policy mix in order to tackle these problems. Inflation needs to be brought down. That's the number one issue. And that means monetary policy needs to be tight and sometimes tighter, and that it needs to be maintained longer at higher rates. This is the number one issue. But a monetary policy cannot do it alone. We also need fiscal policy to be aligned, and that means that fiscal policy needs to consolidate to support the disinflation effort. How can that be done? Windfall revenues, windfall taxes should be saved, and at the same time, as energy prices drop, energy support packages can be phased out, or at a minimum, they need to be made more targeted. And finally, structural reform can also play a role, both in terms of supporting growth, but also in terms of helping bringing down inflation by focusing on labor market and labor market participation.
And now you made the perfect segue to my next question, because, you talked about monetary policy. That's the European Central Bank. There's a meeting happening next week by the ECB. If I look at the reports that you've put out, you say the European Central Bank could, in principle, the way you see it, still go for another 75 basis points worth of hikes. When it comes to next week, maybe it's not up to you to tell Madame Lagarde what to do, but in an ideal scenario, at this point, the European Central Bank, how much should they hike on a week like next week? And what do you think is the appropriate message that would come out from the European Central Bank?
But what we see on the inflation side is that core inflation is more persistent, and core inflation is still high and needs to be brought down so that we can achieve the inflation target. And for that, what we need in the euro area is a tighter fiscal policy, and that means monetary policy, and that means monetary policy needs to continue to be tightened. How much? That is really an issue of looking at the data at the time of the meeting, because we need to see where inflation is, we need to see how the transmission of monetary policy worked, and we need to see what the outcome in terms of growth effect is. So we need to take into account a number of indicators. But what is clear is that monetary policy needs to tighten, and monetary policy will need to stay tight for longer in order to bring down inflation. Why is that important? Because the worst thing you can do when you fight inflation is loosen too early or pause too early, because that will require a second attempt to tighten, and that will increase the costs of the disinflation effort.
And sir, can I just play the devil advocate here? And some would say, when you look at what the European Central Bank has done already, you look at the most or the fastest hiking cycle ever in the history since the euro was introduced. You look at another 75 basis points, potentially, as you say, that could be to come. That's 75 in terms of the deposit rate, where that could go all the way up to. Some would say, why not just take a breather? Perhaps there's no need for aggressive action. Let's just see how the policy is being transmitted to the economy. Perhaps there's a risk in over-tightening. What I hear from you is that no, you see the opposite would be the real risk.
The opposite is the real risk, because if you stop too early, you may not get inflation under control, and you need to have another tightening effort. Yes, what we see, of course, is that monetary policy will create financial stress. That financial stress can be dealt with other policies. And yes, monetary policy is going to affect and bring down aggregate demand. That is how you fight inflation.
And when you look at the fiscal side of things, and of course today, as we talked about, European finance ministers will gather here in Stockholm. As we started our conversation, you said fiscal policy should not be an issue when it comes to the monetary policy. You shouldn't fight it. But also you said maybe it's a time to make it more targeted, but also phase out some of the measures. Is that the message that you will convey to finance ministers today?
Absolutely. Fiscal policy needs to support a disinflation effort, and that means it needs to become more contractionary and support the central bank in its fight against inflation. But it also means, when you look at the medium term, that fiscal policy needs to start consolidating. If you know one thing, we know that the next shock is just around the corner. And for that next shock to be ready and to have the firepower on the fiscal side, again, to fight it, we need to create fiscal space. We need to create those fiscal buffers. And that requires to consolidate in the medium term.
And then, of course, it's a very interesting time because the Commission has put out what is their proposal. It's very initial, though, for the new fiscal framework. A lot of people say, well, here we go again. These are the fights in the euro area. Those that say, well, we need tight focus on bringing down budget deficits, and that should be a real focus there to see real consolidation over time. And others that argue, well, this is a perennial problem of the Eurozone where you simply do not invest enough and you don't foster policies that promote growth. You focus too much on bringing down deficits, you suffocate the economy. How do you see it, again, keeping into consideration that this is a long process, that this is the start of a long debate, but where do you see things going? What is the optimal, perhaps, landing point for this?
Yeah, but what we see in terms of the discussion on the fiscal rules, many of the proposal by the EC are in line with what we have been recommending. We see a more country-specific fiscal consolidation path being proposed. We see a focus on medium-term plans, and we are seeing a move to a expenditure trajectory. Those are very good elements. Where we see some scope for improvement in the longer term is to establish an independent fiscal council for Europe. And as you know, we have been arguing for a very long time for a central fiscal capacity, which helps to be counter-cyclical, but also helps to finance common public goods. Those are elements which are not in the proposal, and we would like to see those in future. Right now, what is taking place is a dialogue between the members, because in the end, these rules need to be owned by all member countries. And therefore, I'm not surprised that this is a serious discussion taking place. But what is also important is that discussion will need to be brought to a finish because these rules need to be in place, hopefully by end 2023, so that they can be applied in future. The new rules, as currently composed, are a vast improvement over the old set of rules.
And can I just ask you, well, not to name anyone or any countries in particular, but you know that some of the criticism about perhaps the focus on benchmarks and this constant kind of number pointing in terms of the efforts when it comes to budget consolidation, some of the critics, though, say there's too much fixation perhaps on those targets, and it's not perhaps the best recipe for growth. I mean, you know, this has been a perennial debate now in the euro area for 10 years now. What is the right way to go about this? To focus on the budget consolidation or promote the growth that the European Commission says it wants to bring across all member states? So how do you see this debate? Because to me, it seems like we go around in circles at times.
I think what the objectives are very clear. You want to prevent that you have a fiscal situation in a country which affects negatively all others. That's what the rules are for. And at the same time, what you want to avoid is that you crowd out public investment when budget conditions are getting tight. Because in the end, public investment is necessary for growth. And I think those things need to be addressed when you are discussing consolidation paths going forward, that you are protecting public investment. That may happen through higher revenues. That could happen through switches in expenditure. It is going to be necessary to have that discussion because we will need more public investment to increase productivity. We will need more public investment in order to help the green transition. So those are important discussions to have.
Just as a final question, obviously you're the head of Europe for the IMF. Well, the UK is obviously not a member of the Euro area or the European Union anymore, but it's still part, as far as I know, of continental Europe still. In your IMF forecasts and your projections, I spoke with the Chancellor, Jeremy Hunt, at the IMF meetings that just happened recently, and he said, you know what, the IMF is too negative. They get it wrong, and we're going to prove them that we can grow way more than what they think and actually hit our fiscal targets. Inflation, if you look at the latest data that came out, well, came in hot would suggest that perhaps you're right and not so much Mr. Hunt. But how do you see things going in the UK?
Certainly, I hope that we are getting a higher growth rate than what we are forecasting. The reason why we are forecasting a shallow recession is that because British households have been hit hard by the energy crisis and the increased costs, including on the mortgage side. And so demand is going to shrink. At the same time, financial conditions have been tightened because the Bank of England had to raise interest rates in order to start taming inflation. Those are elements which are underlying our projection. But we also see that the spring budget has very good elements. It is continuing the medium-term fiscal consolidation. It is supporting a monetary policy in terms of the disinflation effort, and it focuses on some important structural reforms, business investment and labor force participation. And those will be elements which will be fundamentally important for increasing growth and for increasing productivity growth, not only now, but also for the medium term, because that in the end what matters. What kind of growth are we getting in the medium term? And we need to gear towards increasing productivity, not just in the UK, but everywhere.
And just very briefly on this, you said that what you've seen so far in the spring budget, the direction of it is something that you would say is positive. You've not been as constructive, in the past about UK budgets. Liz Truss and her budget obviously got a very public slapdown from the IMF. Now your tone obviously here has been changed or has changed significantly. For markets to believe that you have a hold of an economy and that you're credible, you need to have the political element also that shows there's stability and there's some roadmap. Would you say now what you get from the UK shows there's stability and there is a roadmap that you can work with?
Yes.
There's no question.
No question.